Everybody, welcome to Dollar Cost Awesome. I'm Stephen, this is Colin, and we're here for our week 14 weekly buy video. I think we missed last week, so we're going to do a couple weeks here today. But yeah, what's new, Colin?
What's new? Oh my gosh. Well, this week was a bit of a roller coaster. I won't talk too much about it because I think everybody was expecting it. So Canada raised their interest rates by half a point, and the Federal Reserve did it this week as well. Was it Tuesday? What's today? Today's Thursday. Yeah, I think it was Tuesday. Yeah. And actually, the market actually went up because some people I think were fearing that the hike might have gone up by 75 points, but they're just doing 0.5% raises, and they said, "Don't worry, folks, we're only doing 0.5% raises for next little while." So the market was a little bit up, and then promptly went down again. So
Yeah, yeah, there's a $1.3 trillion stock sell off on Wall Street,
oh
so
my gosh,
just a little bit.
yeah. I mean, I don't know. Every single year, there's been a prediction of like just a massive like sell off. Um, again, I like. I don't think it's gonna be 2008 again, but like we're we're way overvalued on a lot of things. So this type of correction, this isn't even a correction, but like these type of falls, it's just par for course.
Yeah.
Yeah,
Yeah, if you're youngish like us, that's actually not the worst thing because it lets you buy buy a lot of investments at a lower price. But yeah, if you're getting closer to retirement, that's a little scary
it's a
prospect
little
for
dicey.
sure. If
Yeah,
you're not in not in a conservative enough portfolio.
yeah, yeah.
But everything in bonds, yield rates are going up.
Yeah. Do you know if have you been looking at the interest rate? Like, are people because they're saying hikes will be like in the order of like couple months per hike. Do you know if banks are proactively raising interest rates? Because they wouldn't
Um,
they wouldn't like be like, oh yeah, tomorrow's the rate,
yeah,
right?
I think I only anecdotally I know like we just renewed our mortgage a few
Mm-hmm.
months ago.
Yeah,
We renewed it early because I knew rates were going up.
yeah.
Um, and I was watching, and it seemed like the mortgage rates were going up ahead of announcements, so they were already kind of like pricing in the
Okay,
interest rate bump into the mortgage rate.
okay.
But I don't know about other types of loans and stuff. And yeah, I don't know that if that applies for sure against all lenders or anything. But yeah, just
Mm.
anecdotally, it seemed like they were bumping up rates ahead of the announcements.
Okay, yeah, yeah. And since well, there's no guarantee, but since they're basically saying they're gonna raise it a few times, that I wouldn't be surprised if banks in the very near future just priced all that in fairly
Yeah.
soon. So good job on the people who like you renewed their mortgages earlier this year. Do you want to look at your portfolio first, Steven?
Yeah. So last couple weeks, yeah, nothing too exciting. Uh, everything went down. So yeah, so a couple weeks ago, yeah, I was down $57, and then before I did my buy today, I was down $101, and I'm still down $101. So yeah, nothing too crazy. The last couple weeks, yeah, mostly just focused again on keeping that differential kind of in check there. So indices are a bit low. Everything else was pretty much on par or higher. Um, last week, I think I actually bought some tech just because the um actually I think I bought a share of the UFO ETF. Nope. I lied. Yeah, I bought a share of the tech ETF last week. Oh wait, that's a month ago. Okay, I don't know what I did last week. I think I probably just bought uh yeah, I bought some shares of the Europe ETF that
Okay.
I mentioned on our last episode.
Yeah.
Yeah, so yeah, for the last couple weeks, mostly just worked on bringing the differential kind of up a bit to varying success. I kind of went in a little bit on some tech stock or on the tech ETF just because the technical analysis was pretty good for it.
Okay.
Showed it had really bottomed out, which like that's something you'll see like tech stocks have fared particularly poorly in the last couple of weeks.
Yeah.
Shopify is down below its
Oh
like
my gosh, Shopify. That's
pre-pandemic levels.
yeah.
Um, so yeah, so tech was down, so I bought some of that. And then yeah, other than that, just focused on bringing in more ETFs. And I did go a little extra into crypto this week too, because crypto is also down a fair bit.
Mm-hmm. Yeah.
Yeah, everything's kind of within 1%. Yeah, just kind of business as usual.
Cool. I'm glad you mentioned Shopify. They miss earnings. I mean, it wasn't like it wasn't something like super shocking, especially with a lot of stuff in limbo the last little while. So the growth of Shopify definitely stopped, and they missed earnings. But very good, very cool. Let's jump into mine. Okay, so this is my portfolio for week 14. I am down quite a bit. I'm down over $100 on my TFSA, and my crypto's down $36. Uh, so a little bit of ouch the last little while, but it is what it is. I think I've tried to balance it with more traditional blue chips, but I do have a bit more tech. So that's what happens when interest rates go up, and growth companies rely on that cheap debt to. The first thing I bought in week 13, or the only thing I bought in week 13 was CP Rail. So CP Rail and CN Rail are the big boys in Canada. There's nothing much to talk about them. They've been the two big players for a very long time. There's no major development that would like cause them to skyrocket, but they're consistent in their use in resource transportation or goods. So they're just a good steady buy, and I didn't buy them because they were extremely undervalued. They did drop their earnings. I think their earnings was a little while ago, and they I don't think they missed earnings, but they weren't what analysts expected. And something also happened, so I can't remember. But they dropped a little bit, and I picked them up. But mostly I looked at them because I didn't have it in this portfolio, and to me that's a shame. So I did buy them. Anyways, CP Rail, nothing much to talk about. Ooh.
Does do you want to go back to CP for a sec?
Okay.
Is it Bill Gates's ex-wife, who owns a
A part
really
of it?
big chunk of CP, or is that CN?
I don't know. Actually, I didn't know that was a thing until now. So
It's CN, not CP.
okay. Do you know how much
Um,
they own? Like how
I
much she
guess
owns?
she sold a chunk in December, but
Okay.
she was one of the largest shareholders.
Oh,
Um,
interesting fact.
she
That's
sold 3.7 million shares in December.
oh geez. Okay.
She now owns 20 million shares, plus another 13 million through the Bill and Melinda Gates Foundation Trust.
Oh wow. What
So her
what's the outstanding
overall
share? Oh, sorry. Go ahead.
her her overall ownership between personal and through the foundation trust is almost 5% of all CN shares.
Oh wow. Okay.
It's quite a bit.
That is quite a bit. Is do you know if there was like some
Oh,
uh,
Bill Gates owns 81 million shares for an 11.6% stake.
oh geez. Do you know they have some sort of connection with them prior, or do they just go like, "Oh, this is like a solid company. We're gonna invest in them."
I'm not sure,
Okay. Hmm.
but
That's very interesting. I never thought Bill Gates would divorce. Like honestly, like he seems like the guy who just like, yeah, I'm. This is my life sort of deal, and but who knows? So my buy this week, um, is BCE, which is Bell. Um, everyone knows. Is Bell in the U.S.?
no,
No.
I don't think
Okay.
so.
Okay. So nobody from the U.S. is watching us, but if you are, they are a major telecom here, um, and we've talked about telecoms in the past, so I won't talk about it. But there are only a few big players, and they're very consistent. Solid history of revenue, decent dividend, another safe play. Nothing too crazy about them. Oh, I also bought another share of the Canadian ETF. I forget which one it was. It was like $35, but yeah, that's my week 13, 14. So we're both down a little bit, and I always say I hope the next week will be better, but with the interest rate hikes continuing, uh, even if I feel like it does improve in the week after or the next week or the week after, it's only gonna be a downward trend for a little while.
Yeah,
Yeah,
yeah, it seems likely.
yeah,
It is interesting. Like you're down 50% more than me, which like overall, like I'm down 4.5%, and you were down so probably about 6%.
yeah,
But
yeah.
yeah, that is like because most of all of my investments are ETFs, and it's like pretty heavily in the indices, which are super broad
Yeah.
based ETFs. It does make it more resistant to big market
Yes.
swings.
Yes.
So yeah, that like broader diversification that index ETFs offer and ETFs in general does kind of insulate you a little bit from from those bigger swings.
Mm-hmm. Very good point about diversification. Very good. Um, I know some people. It's one strategy. I haven't looked into its effectiveness historically, but some people like to start buying dividend heavy stocks, especially ones that have a long history. I think they're some people call them dividend aristocrats, um, where even in a recession they might not increase their dividend, but they'll pay the same amount regardless. In a downturn, having that solid fixed income will beat the growth companies that normally outperform them wildly.
Right.
So, yeah.
Slow
Well,
and steady wins the race
yeah, yeah. Cool.
sometimes.
I mean, we are DCAing, so I guess. So, yeah, we're both down this week. Um, but like Steven said, good strategy to insulate against some of the volatility is to just buy ETFs where you're very heavily diversified. Steven's going to take a break next week, so I might be alone. But we will join together again in week. We will join back together in week 16 for our normal sharing our portfolio. So until then, keep on DCing, folks.
That's it.
See ya.